Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. This video is going to be my Monday buy video. Every single Monday, I deposit $100 into my dividend portfolio, my Average Joe dividends portfolio, and then we see the results of the additional dividends I'm going to be receiving, and we'll just do a general portfolio update. We had some big dividends roll in over the weekend from BST, one of my biggest holdings, as well as Starbucks. So it really made my deposit, $100, look small in comparison. But what we're looking at right now, this is my taxable M1 stock brokerage account, and I'm showing you guys what I'm doing with this, and just for this kind of transparency, please click the like button, because I'm not trying to sell you guys anything at all. I'm not trying to get you guys to join my Patreon or buy me a cup of coffee, any of that nonsense. No subscriptions, no merchandise, nothing. I'm just showing you what I'm doing, and I'm building a dividend portfolio that is paying me more and more money. The dividends are just increasing over time as I'm putting my own money into the portfolio. I'm dripping those dividends back into the portfolio, and these investments are increasing their dividends year over year. So let's take a look at the performance of this portfolio over the last year. And we can see down below the money weighted return is 12.68%, but with the dividends in there, we're over 17%. And we look over here, the dividends earned at 11,693.39 over the last year. So that's not too shabby at all. And like I said, this just keeps going up. Let's look at the last 3 months, how the portfolio is done. So last 3 months, we have gone down. We can see the all-time high was right around February 19th and 20th, and we've kind of gone down. We had a little bit of a recovery in the 28th, and then we're down a little bit today. It was kind of strange. This morning we were up over 280, the portfolio value was, and now it's just kind of retreated a little bit. So you just don't know what the portfolio is going to do. You have no control over the stock market, but one thing you can control is the dividends that you're going to receive. And that's one reason why I built this portfolio, was to kind of get the income side nailed down to my early retirement. I didn't want to have the stock market dictate when I could retire. Even in a down market, I could still retire with a portfolio like this. And this portfolio, this is 15% of my current net worth. I have a huge foundation of ETFs like S&P 500 index and a total stock market index, things like that. And it gave me the confidence to build this portfolio. So let's go into the activity log, and we'll see what my $100 deposit bought, as well as the $500 plus that rolled in with the dividends from this portfolio. So we'll go into the activity log and we'll see what those were. And I'm using auto invest, so it's going to invest the money into the underweighted portions of the portfolio. So it's actually kind of buying the quote losers a little bit, or things on sale, depending how you're going to look at it. But here is those big dividends that rolled in over the weekend. And M1 has a 1 day delay, so it actually came in on Saturday morning. So I got a dividend from BST, 505.97, and this pays me every single month. And then Starbucks, this is a quarterly dividend, 10.93. So this roughly $516 and change, this is getting dripped back into the portfolio. The BST portion is going to auto invest, but the Starbucks is going to drip directly back into Starbucks. And also, oh, I forgot KKR. There's an additional 279. So KKR, Starbucks, those are going to drip back into those positions, but BST is we're going to spread the wealth a little bit with auto invest. That is a rule I set up with how I'm dripping BST, and also SCHD, which is going to come up here in a couple weeks when it pays that dividend, which is going to be well over $700. It's going to go into the portfolio and kind of spread the wealth, like I said. So here's the 9 buys. So first up, Starbucks. This was a dividend drip. So this dividend, the 1093, is going to go in and buy 0.0931 of a fractional share of Starbucks. So we're going to see Starbucks's dividend go up. All these are actually going to go up a little bit. Nvidia even is going to probably go up by a penny because one share of Nvidia buys you an entire penny of quarterly dividend with Nvidia. But I added Nvidia not necessarily for the dividends now, but the appreciation and the dividends later. So here is the next one, BlackRock. So part of the BST dividend, this is being split, and this is part of that. BlackRock. So 1603, it bought a tiny sliver because look at the share price, almost $1,000 for BlackRock. So it bought 0.01624 of a share of BlackRock, but I think it will add it'll make it a higher dividend for BlackRock though. We'll show you that in a little bit. And then BST, so a good chunk of the $505 went back into BST. So not quite half of it, but it's going to buy 5.29181 shares of BST. So this is an additional monthly income. Each share of BST pays me 25 cents. So it's going to pay over $1.25 more the next time with this partial drip that happened here. And we'll go to Oracle. The $50.10 that bought 0.30453 of share of Oracle. So you can see what's happening here with these buys. I'm buying fractional shares, but as I do these buys, I do 2 a week, and then with the dividend drips, and sometimes I do special buys, or I put $1,000 in and buy even more rapidly, whole shares, things like that. It just increases the dividends and the portfolio value as a result. So next up, Nvidia, 112.35, and it bought nearly a whole share, 0.93547 of a share of Nvidia. And then let's see what's next here. KKR, this is the dividend drip. So it bought a tiny 0.02027 of a share of KKR. We'll see if it buys like a penny more for the next dividend for KKR. And then American Express, looks like that was one of the top buys, the BST. And then American Express, it bought 0.33937 of a share, so pretty much a third of a share of American Express. And then Qualcomm 7756, that bought nearly half a share at 0.49066 of a share of Qualcomm. And again, we're going to see what the next dividends are going to be for these investments. They're all going to go up. And then we'll see the monthly, quarterly, and annual dividends for this portfolio go up as well. So the 52.39 for Kroger, again, this is from the BST proceeds, and it bought 0.8146 of a share of Kroger, so a little over 80% of a share of Kroger. And that was, so that wrapped up that. So we're going to jump over to my Google Docs spreadsheet. And on this spreadsheet, I track the positions that are in the portfolio. And there's 52 positions. You can see my cost basis. Here's the current value if I were to sell everything out of it. Here's the unrealized gains. And we'll go back over here. We're going to grab data from here in just a moment. If you're curious to see what's all in this portfolio, I'll leave a link below to my M1 pies so you can see what's in there, what's my allocation for each position. So let's go back to the Google Docs spreadsheet. I'll also leave a link to this. If you have a lot of dividend positions, individual positions, you're welcome to use this sheet and put in your own company and ticker symbol. The share price will look up on its own with a Google Finance function, and it's just looking at the ticker symbol and returning that value. And then the average share price here, you can see what my average share price for Fifth Third is. Well, let's concentrate on Oracle since I bought more of that today. I didn't buy any Fifth Third. So you can see the average share price of Oracle I've bought and the current share price. And then it's using a VLOOKUP on the M1 data tab. We're going to get into the M1 data tab in just a moment. We're going to actually paste some information from the holdings tab of M1, and it's going to automatically update this Google Docs spreadsheet, so I don't have to type in the new average cost I've paid, the number of shares in my cost basis. It's going to automatically update that with a copy and paste. It's pretty slick. I came up with it myself, and like I said, you're welcome to use it as well. And so the share number of shares also uses a VLOOKUP. And here's the value if I were to sell Oracle today. Here's my cost basis. Here's my gain or loss with Oracle. You can see it's quite a good gain there. And here is that gain or loss in a percentage. Anything above 25% for the percent gain or loss, that's going to be in green. Nearly doubled my money with Oracle. Here is the quarterly dividends for Oracle. I have 2 monthly payers with O, and remember that BST, that 505.97. We're going to see that go up, as well as these others where I've hard coded these numbers in here of the 9 positions, I believe. We're going to see all those go up. Hopefully KKR will too, probably just by a penny, because KKR pays a small dividend, and I think it was a $2.79 dividend, but we'll see if it moves the needle on that. Here's the current yield. So Oracle, even though we bought, I think it was $40 worth, the current yield is low it's less than 1%. So it's not going to move the needle a whole lot. But here's the yield on my cost. Since I've bought shares of Oracle for lower at 87.19, my buying power is higher. So my yield is higher on that. And as Oracle hopefully goes up in the future and they raise that dividend, my yield on cost will just keep going up and up. Here is the pay date. Everything on this sheet is arranged from the oldest to the newest, and I think the last one, the announcement I updated, was Verizon. So they recently paid their dividend, was that in February 2nd. So they announced their new dividend in February, or plus 3 months in May 2nd. So you can take a look at that dividend. I'm going to be getting May 2nd, 61.90 there from Verizon. That could be higher if I buy more fractional shares before the ex-dividend date, of course. So here is the next dividend. It's really simple math. Of pretty much, it's exactly just taking the dividend, the quarterly dividend times the number of shares. That's the simple math there. And you can see it's $5.67. And this is going to go up. So the April dividend for Oracle is going up. And also, we'll see though, it seems like Oracle has a pattern of raising their dividend every 2 years, and it occurs in March. And the last time they raised their dividend 2 years ago was by 20%. So we'll see if we get another double-digit dividend increase for Oracle, hopefully in March. And who knows, maybe another 20%, or I'll take that, because that would be an over dollar increase in the dividend at the current dividend rate. So that will be nice to see if that happens. So we can see the total dividends I've received from like Oracle, $43.88. Here's the last increase, or just went over that, and then the last increase month. I have it marked as variable because Oracle does not increase their dividend every single year, but most of them do, with the exception O does multiple dividend increases every year. And it's been like 3 years since BST and like 2 years since Digital Realty has increased their dividends. So I've noted those. That's why I've kind of shown that. So I know what to kind of expect for the dividend increases. Hopefully Oracle, and then it looks like American Express, which we bought more shares of here. Hopefully we get another 16% dividend increase there in March, and we'll sneak it in before the next dividend, which is going to pay likely like about May 11th-ish, right around there. So on this sheet, there's a table over here where we're going to change the cash flow average. The monthly, quarterly, and annual are all going to go up over here. This will be the current rate, but it's going to change over here and go up. And then we're going to take the monthly average dividend. We're going to put that on the monthly average dividend tracking tab, but we'll get to that. So let's go grab some data from M1 on the holdings tab, and it's going to pull the shares, the average share price, as well as the cost basis. And I grab this starting from the name column. I go all the way down. We're going to do a copy of everything in the portfolio. So this is the data we're pulling from M1. We're going to paste it on the M1 data tab, and what it does is it aligns it for each of these positions. Like SCHD, we didn't buy any more shares. That's not going to change, but it will change for BST. So this line we're going to see change once I do this pace. So look carefully. We're going to see all these, the number of shares, which this should actually be not in a dollar sign format, but it doesn't matter for this. These are uh, shares right here. You can see right here. Same with this. Those are a number of shares for SCHD. So let's paste special this information in here, values only, and it's going to change for the 9 positions. You saw that change for BST, and that has changed everything on dividend portfolio for all the positions where fractional shares were purchased. And we're going to see the monthly, quarterly, and annual dividends for the portfolio go up. So let's read the 9 positions and how the next dividend is going to be larger, with the exception of Kroger, because Kroger is going to be paying me here soon, and we're way past the ex-dividend date. So it's going to be the next quarter. It's going to be a larger dividend. But for Oracle, we're moving from 567 to 580. And then American Express, we're moving from 483 to 507. So over the $5 mark. And hopefully we can see a 16% gain on the next dividend. That would be quite nice. That would be another, 50 cents, 75 cents around there. So getting close in the high fives, 580, 590-ish once we get the dividend increase. That's if American Express is going to be that generous. We'll see if they are. And then Starbucks, this is the dividend drip. So that effect added a nickel. So from 10.93 to 10.98 for Starbucks. KKR, we added a penny, as I thought it was going to be a very low dividend, as KKR pays a 0.5% dividend there. This is more of a long-term play in growth. You can see I've over doubled my money. Look at my gain or loss with KKR. I've bought my shares at 61.03. Here's the current share price. That's my plan here. I have a good mixture of companies that pay a good dividend today and ones that are paying a growing or rapidly growing dividend for tomorrow. So I don't want stagnant dividends. I want growing dividends. That's why I have positions like KKR and Costco in here, and Apple as well. And then Kroger, like I said, this one, we are going to get this dividend tomorrow. Actually, what we'll do is we'll pull up those dividends here once we tabulate these, and I'll go to M1 and grab the new dividends, because these dividends are going to roll in. I don't know if it's going to be all these. We'll look them up and we'll see, and we'll put those numbers over, and we'll see when it's going to be over $50. You can see right there. I'm going to wake up tomorrow morning. I'm going to get these dividends, and they're going to be dripped back into those positions. And guess what? All these dividends are going to go up. That's what's going to happen. They're just going to keep going up. So Kroger's next dividend, that now for tomorrow, is in June 4th approximately. Is going to be from it's going to be 5.53. The old dividend 5.27, and then over here, BlackRock. This one I believe did sneak in. So on March 25th, the new dividend is going to be 10.43 instead of 10.35, and then Qualcomm. That dividend moving from 7.78, now we're in the 8s to 8.19. And then look at this with BST, not even investing the entire dividend back into BST, and still moved the needle from 505.97 to 507.29. Look at all these dividends I've received from BST. It's just been incredible. This, I was calculating and thinking about this dividend for BST. Once I pay my house off, this is my property, property taxes and insurance, and probably another bill like my internet bill every month. So that's just incredible. We'll scroll down here. Look at this. Nvidia, as I suspected it's going to add another penny. So moving from 42 cents to 43 cents for Nvidia. But again, Nvidia is not, so far, has not been a dividend play for me. But look at the return on this, the percentage gain I've made with Nvidia. Here's my initial investment, and here it's almost $5,000 with it. So it was a lot higher when it was in the 130s, but since it's dropped in value in my portfolio, it was one of the buys today because it's, quote on sale. It's now underweighted, and this helped balance it out using the BST funds to kind of rebalance. So I'm rebalancing with dividends right now, and also the deposits. The Monday morning $100 deposits do a rebalance. The Thursday video, I pick 5 stocks and put $20 into each of those. So we're going to go over the cash flow averages. I should probably call this just cash flow average because it's not just monthly here. Let me just rename that. It's just cash flow. So monthly, we're moving from $1,043 or $43.90. This is like a monthly paycheck. It's now $1,045.62. Here's the quarterly, 31.31.71 now to 31.36.86. And look at it, really moves the needle annually from 12.526.85 to 12.547.40. And this was just really with a $100 deposit, and just the portfolio, just the snowball effect on this. So let's go ahead, let's get those next dividends that I'm going to be receiving tomorrow. So we're back to M1, and how you can look it up on M1 is you can see what your future dividends are going to be. Usually it's after the X dividend dates, usually a week after or so. So let's take a look at Black Hills. And then we'll go to usually it's the 1 month view is where you're able to pull up the dividends earned. So 2707. So it looks like I didn't buy any fractional shares of BlackRock after the X dividend date. So that's what I'm going to receive tomorrow from Black Hills. So next up is Kroger. That's in a different slice. So that's in the 12 more dividend side. And I'd like to consolidate these all into one, instead of having these pies. But we'll see if I do that. Kroger, and then we'll see the 1 month view for it, and then 527 under dividends earned. So remember, we bought some the fractional shares today with the buys, but I'm going to receive 527. The next dividend on June 4th will be that 553. So that's what we're going to receive there. We'll go to Aflac, and that's in the main dividend portfolio. We'll pull that one up. Find Aflac, there it is. And we'll get the 1 month view. Should default to that, and then dividends earned 12.22. And then we'll do the last one, and we'll do a count up, and we can see how much money I'm going to wake up to. And it's a feeling that it never gets old. You open up the app in the morning, and then you see those dividends they're in there. They show up, and you don't have to do anything for them other than just hold the shares, and then you're automatically paid. I don't have to write anybody or email anybody for the money. It just appears there, and I can do with it whatever I want to, since this is a it's a taxable brokerage account. And sometimes this happens where the 1 month view doesn't show it. We'll go to the 3 month view, and $8.45. We'll go there, $8.45. So tomorrow I'll have an event with these 4 dividends, so I will get a sum of $53.01. So these will be, of course, drip back in, and it's going to increase all these 3 all over again. It just happens like every single day. There's an event where there's a dividend drip, there's a dividend increase, there's a buy, and this cash flow just keeps going up and up and up, which is awesome. So let's go on over to the dividend tracker tab, and you can see here I started tracking this portfolio when I started doing these videos January 2021. Here's the portfolio value, and we just closed out February for our dividends at 688.34. We can see the progress just from the last year from 622, which is very nice, in February 2024, but we're up to 688. We'll go to 2023, we're at 491. We're under $500. And look at March. March is going to be a big pair. March, June, September, and December are the big paying months for this portfolio, because most of the companies pay their dividends in the last month of quarter, and especially SCHD. And we can see, so March 23, 1264, 1446. So hopefully we're going to be in like the 1600s and for March 2025. So no dividends so far for March, but that's going to change tomorrow. We could just put that in really quick so we know that's going to show up. So 5301, put that in there. And then now you can see here's the average monthly dividend, and we've raised that by $1.72, and that was with the BST Starbucks dividend drips as well as the $100 deposit, and it bought those 9 positions. And then you can see here's the month over month gain in the average monthly dividend. I call it average because you can see how the months are lumpy, where you get the first month of the quarter, second month of the quarter are smaller, and then the last month of the quarter is large. So when you take an average of that and of what it currently everything is paying in the portfolio based on the current shares, that's how you derive that, the 1,045.62. You can look in the dividend portfolio tab and look at the math for all that. And here is the annual dividends. Now we're up to 12,547.45, and there's the annual increase. We've deposited $100, and I forgot to carry over that 1,045.62 on the monthly average dividend tracking tab because we had the event. $100 deposit with the BST and Starbucks dividend. So again, that's going to be 1,045.62. 1,045.62, and there's that $1.72 difference. And it would have been more if I would have just dripped it all back into BST. It would have been over $3, probably 3.25 at least. But I wanted to spread the wealth and increase the dividends of the other positions, because really BST it's always the heavy hitter. I want some other heavy hitters in here. There's a few others. SCHD is that's the biggest one, but that one's only every 3 months. But BST is, it's over $500 every single month. And we have some nice other ones in here, $28 and $50, things like that. But I want to get some of these other positions in the green above that $10 mark. And it's going to take some more effort, for something like Apple and things like Costco. It's going to take a lot more money to get that in. So that BST money is going to help hopefully elevate some of these. So there's a whole bunch of them hitting me with good dividends. So not just from one source or primarily from one. So that's why I'm trying to spread the wealth with the BST and the SCHD. I set the rule on those. What I mean by that is we'll go back to the dividend portfolio tab, and we'll scroll down to here we go. I'll show you the dividend handling. It's custom. So I have reinvest. You can see BST goes to cash, and it uses auto invest. And there's just a couple others. Like I said, SCHD, and then NVIDIA. Since it's less than $1, it can't resolve that. So I just use the 40 cents or 42 cents or 43 cents, whatever it is now, just to go back into the portfolio because it's so insignificant. So I think for some of these, though, what I may do is $25 is the minimum for a dividend to auto invest back into the entire portfolio. If a dividend's above $1, you can drip it. So if AbbVie, like the next time it pays in the 15th, or it's going to be May 15th, around there, what I could do is auto invest it and do it cash, and it'll spread it around the portfolio. I may start doing that with the positions that are $25 and above, like with AbbVie and Black Hills and like Prudential and Avista and what else? Verizon. So think about doing that. Let me know in the comments below what you guys think of that idea. So let's see. Last thing to do, we're going to do a quick told net worth statement here. It's always up and down. And so just to show you where the other 85% of my net worth is in, I have an IRA over at Vanguard, a traditional, a Roth. I have a taxable brokerage account. So right now I have a total of $474,000 in change over there. And you can see it's all in ETFs. So well diversified over there. And here's my current employer, all in S&P 500, a very low fee choice with Fidelity. This is probably the best, what I thought the best investment. And I recommend if you're younger. This is just me, though. I'm not an investment advisor. When I started out, I want to be conservative, like with a target date fund, or put in like half bonds and half stock. If I had to do it all over again, it would be 100% stocks, even into my 40s or even my 50s if I'm still working, because it has high volatility, but in the end, you're going to have a higher balance. So just ride out the storm and just you'll make more money as a result, in my opinion. So here over at M1, I have another IRA over here. This is my prior employment to my current employment. And you can see the balance there is 706K. Here is the dividend portfolio that we went over at length over at M1, 278K. Here's my 1 year emergency fund sitting over at M1 getting 4% interest. I have a 6 month emergency fund over at Synchrony at 30,000. And then over here is like 2 months of spending. I paid off my credit card, so waiting for a paycheck to get this back up to 10,000. That's kind of like the threshold. Anything above 10,000, I'll move on over to Synchrony. Here's the value of my home. Here are my liabilities. Credit cards paid off. I always pay those off every month, so I do not accrue interest. And then here is my only liability, which is my home. Here's the mortgage, and here at a 6.25% mortgage rate. I bought the home last year, so it's kind of higher. Wish I would have bought it, a couple of years ago. But it is what it is, and I want to pay this off early. I'm making extra payments on it. So my net worth is dipped into the 1.7 million, just shy of the 1.8. Hey, no big deal. If we could have a market crash, it could go way below that. I'm prepared for that. So here's the breakdown between stocks, home equity, and cash. And then here it is by pre-tax and after tax. And you can see I'm a 401k millionaire right there. It was over 1.1 million. So you could call me, Coast Fi or whatever. I probably could be A-OK if I didn't contribute another dime into an IRA or 401k. That's a pretty good nest egg to have waiting for me. And I have after tax stuff or too as well. So I'm pretty well set up. So here's the breakdown US international. And then here's the average monthly dividend of all sources. And that BST, that dividend not only arrived at $505 in my taxable, but in my IRA it also hit too. It was $454 or right around there that hit. And actually I can, let's see what it was. Yeah, it was $455.95. That was what's rolled in, and that dripped back in, and then it's going to increase the dividend for next time to $459.05. See how that works? And so it increased then the average monthly dividend as well, getting close to that $3,500. So this really shows if I were to retire and I had access to my IRAs and 401ks in approximately 8 more years, right around there, I would then be able to draw the interest from my savings accounts as well as just the dividends from my investments, not even selling a share. I could just draw that. That would be my dividend, my paycheck, monthly paycheck, almost $3,500. But it's going to be a lot higher by the time I'm able to access that money. And in that 8 years, we're going to see a lot of more dividend increases, things like that over that time. So it's going to be much higher than that. So that's all I had to show you guys for this video. We'll go back to the activity log and we'll take a look at those buys. So the two, there were the drips in here, the Starbucks, KKR, those went back into there, but we bought more, BlackRock, BST, that was a partial drip there, Oracle, Nvidia, American Express, Qualcomm, and Kroger. Let me know in the comments below what you guys are buying this week. If you got value from this video, please click the like button. Also subscribe so you do not miss future videos. I hope everyone has a great week. Everybody take care.